You talked about rally caps. Not everybody gets that. Of course, late in the game when you're losing, especially in baseball, the baseball players used to turn their hats upside down or sideways and say, let's get a rally going. But that's exactly what happened in the S&P 500. They get to these big numbers, and it always gets a lot of attention. The Dow Jones is something that we do watch, and we more importantly watch the S&P 500. But the Dow ticked off 40,000, a major milestone this week, Brian.
It did, yeah. There was a lot of media coverage during that event, and actually, if you looked at the people on the New York Stock Exchange, it used to be that people would have those baseball hats that would say like 30,000 or 20,000, and I didn't see anybody with the 40,000 hats on there. And maybe part of it is just because trading has changed so much over the years. There are still some people on the floor, but most of it is done electronically now. What really triggered the market to hit that kind of milestone, as arbitrary as what it might be, was the decent inflation numbers that we got. That was really encouraging, really suggested that the really hot inflation data from January, February, and March is beginning to retreat, get back on track towards that eventual 2% target of the Fed.
And that's what we're going to have to watch, because we looked at it, and they take the month's number and multiply it by 12, so it came out to 3.4%, which is still higher than the 2% target. So, we're going to have to watch that. And I do want to go back to the 40,000 in the Dow for just a second. And maybe the reason why we didn't see as much excitement is just the rule of numbers. And here you go, Professor. I'm going to lob this up to you. When we went from 20,000 to 30,000, that's 10,000.
Yep.
Right? So 10,000 over 20 is a 50% gain. Well, those gains get smaller on a percentage basis as the market goes higher.
It does. Yeah. If you think about going from 30,000 to 40,000, that's still a 10,000 Dow point increase, but that's quote unquote only a 33% increase. And so you sort of get to these numbers, and it's like, is it really that big of a deal anymore? Sure, it was probably a huge deal when you went from 10,000 to 20,000, because that was a 100% gain. But the Dow points themselves, I always need to translate them in my head to percentage points. And to be perfectly honest, I don't even really pay attention to the Dow, except for the fact that it's on the screen. I pay much closer attention to like the S&P 500.
And let's talk about that first. So first of all, I'm so old, I remember Dow 1000. So, and that's that for real. And so let's talk a little bit about how that went down. And of course, we saw this rally. But the Dow Jones and the S&P 500 are two indices that most people watch. The reason why we don't pay as much attention to the Dow Jones, I cut you off, but that's going to be a great answer.
Yes, well, because the Dow Jones only has about 30 stocks in it, whereas the S&P 500, as the name would suggest, has 500. So the 500 stocks, a little bit more diversified than just the 30 you get with the Dow. There's also a difference in the way these are constructed. As far as the Dow Jones, it's what's called a price-weighted index. And so for an example, if you have a stock that is at $1,000, it is going to have more weight in it than a stock that is at $10. But even if the companies whose stock is at 1,000 isn't really that much bigger or better, right? And
so that $1,000 stock could be a $1 billion company, and the $100 stock could be a $100 billion company.
It could be, exactly.
And that's the reason why you like the S&P 500 more often. And let's switch gears to talk about that 5,200 on the S&P 500, higher than a lot of people expected. And most of Wall Street expect that number to be higher by year end.
That's right. A lot of the what we call the sell side. And so that just refers to the big investment banks like the Goldman Sachs, the Bank of America, companies like that. They are out there raising their estimates. One of them, so Ed Yardeni, he actually has a research firm. He's out there saying that 6,000 on the S&P 500 at some point in 2025. Goldman Sachs has said, no, we're probably not going to make any more progress for the rest of this year, but they're beginning to reconsider that. And so that's one of the kind of fun things to watch, is how quickly these sell-side analysts come out and update their year-end targets just because the stock price has currently gone up.
So let's talk about that range. If it stays where it's at, market up, almost double digits for the year, right? So you would book a 10%, call it, gain for the year. That's with zero for the rest of the year.
Yep.
And if it gets to 6,000 on 5,200, right? That's 8%, 10%.
Yep.
It's another 15% on top of that.
Yep.
So that's kind of the range. And as we go into the election year, there's a lot of good things that are happening. And let's go back to where you started, and I want to go full circle. The CPI report because that came out, and then the Treasury market started to react to that.
It did, yes. Yields moved lower after that CPI number came out. So the consumer price index came in a little lower, but that was enough to trigger this rally, not only with stocks, but also with bonds, pushing those yields lower. We also saw, I think very importantly, mortgage rates come down. They're still around 7%, but there was some fear that what if these go back up to 8%? What is that going to do to really crippling the housing market even more than what has already happened? So we do have some good things going on as far as the Fed likely being on pause. I am really carefully watching, though, the health of the consumer.
Right.
Retail sales number, it was flat for April. So was that just a one-off because people spent a lot of money in March and there was a bit of payback
even
in April?
online sales were down. I'm sure you
Yes.
read the report. That was slightly surprising to me that even online sales went down, but gasoline purchases at gasoline stations went up. So it wasn't only just gas, but sometimes people are buying there. But you're right on this thing about what is the consumer doing right now. And that is the reason why we put this inflation white paper together. And it's something we're going to talk more about. But let's just talk about that for a second, Danny.
Yeah, it's hot off the press and available for a free download. It's annexwealth.com/inflation. Whole title, Safeguarding Against Inflation, Strategies for Wealth Preservation in an Environment of Elevated Inflation. A lot of really smart people put this together, you included, right? Right?
I was a small part of the team.
Right. It's a free download. Don't have to be a client. But again, the website is annexwealth.com/inflation.